Hey, what's up, my friend? So in today's video, you'll discover some of the best Forex indicators that work. For example, you'll learn how to use indicators to identify momentum reversal so you can predict market turning points. We'll also talk about how to set a proper stop loss so you don't get stopped out of your trades prematurely. Then we'll talk about how to use indicators to identify explosive breakout trades about to occur, right? Breakout trades that it's off the radar and people are not paying attention to. This is something that you'll learn as well. And how to actually better time your entries with low risk. So all this and more in this video. But first, right, if you have not done so, right, hit the thumbs up button and subscribe to my YouTube channel. The link is below. Hit the notification bell. This way, right, whenever I publish a new video, you'll always be updated. Sounds good? Then let's get started. So the first thing that I want to talk about is that before you can use any indicators or put any indicators on your chart, you have to know what you want out of your indicators. Every indicator on your chart got to have a purpose. Okay, because without a purpose, then the indicators are on your chart just, to confuse things, right? There is no reason for it if you do not know what's the purpose of your indicators. Let me give you an example. Let's say you want to buy a car and you're looking in the market. I want to buy the best car out there, which is the best car? Well, here's the thing, right? What are you looking for in a car? If you're looking to race, then maybe you can get a Ferrari or a Lamborghini. If you're looking for a car with a excellent fuel economy, then maybe you could get a Toyota Vios. If you're looking for a car to, house many people, maybe a Toyota Wish. So you can see that when you want to find the best car, it depends on what are your needs. And when you want to use the best trading indicators, it depends on your needs. Does it make sense? Okay, so this is important, right? And most traders neglect it. So let me repeat once more. Before you put on any single trading indicator on your chart, you have to know what is the purpose. And this is what we're going to dive in right now. So for example, let's say your purpose is to identify momentum reversal in the market. So one thing about the markets is that, when there is, let me just illustrate that. When there is strong momentum, let's say a strong momentum coming into a level where here is a large, big bullish candle, right, smack into resistance, there's a good chance that this level, right, the price would reverse at this level, right? Because if you think about this, right, the buying pressure started here, and if the price were to hit down lower, buyers would only step in, right, at this previous market structure at support. So there's a good chance the market could reverse all the way back down to retest support. Compare this, right, to another variation of this price action where you don't get a strong momentum. Instead, what you get is let's say a stair-stepping price action, higher highs and higher lows into resistance. This type of price action, right, the market, usually when it reverses, right, it has more difficulty because these are all pockets of swing low where buyers could come in to push the price higher. So this is why whenever you want to trade reversal in the markets, right, reversal at market structure, reversal at support resistance, you always want to see, right, let me just draw it again, you always want to see strong momentum coming to a level. This is what I call a power move, right? Strong momentum coming to a level, large big body candles. So now here's the thing. Sometimes it can be difficult to define what is strong momentum, right? Especially for traders who are new to trading. You are not really versed in price action trading. It can be difficult to kind of quantify what is strong momentum. And this is where the MACD histogram can help you. So you can see that I'm not just, throwing the MACD histogram in your face by saying, look for a momentum reversal. No, I explained the principle behind why are you looking for a strong momentum reversal. Because you want to have a high probability of the price reversing at a certain market level, at a certain price level. So let me give you an example. So you can see over here, this, okay, this is the chart of soybean meal. And over here, I got this MACD histogram shown over here. Just remove this. So you can see right now at this point, clearly there is a strong momentum coming into this area of resistance. But maybe traders who are new, they do not know how to identify it. You can look at the MACD histogram. You can see that this bars over here, the histogram, is reaching a peak over here. This tells you that there is strong momentum in the markets. You compare that to previous peaks, right? All relatively low, right? This one here, and this one here. It's all relatively low compared to the current momentum. So this tells you that there is strong momentum in the markets. And on top of it, the price came into this area of resistance, followed by this dark cloud cover, some sort of a bearish reversal pattern. So this tells you that there's a good chance that the market could reverse at this level. Does it make sense? So you can see that how this MACD histogram comes into place, that it's helping you to define what is a power move in the market, what is a strong momentum in the market. That's the purpose of this MACD histogram that we are, looking at right now. So you can see it over here, right? When the histogram shows strong momentum and market structure, like support, resistance, trend line, etc., and confirmed, right, by a reversal price pattern, the market is likely to reverse. So reversal price pattern could be, shooting star, hammer, and stuff like that. But the main purpose of our MACD histogram is to help us define what is a strong momentum, okay? So let me just share with you another example. So this one is the soybean meal. Another one would be oil. Okay, so you can see again here, oil. Over here, this to an astute price action trader, you know that this is a relatively strong move coming to a level. But traders sometimes have difficulty, looking at that and say, that's a power move. Okay, don't worry. This is where the MACD histogram can help you. You can see that again, the MACD histogram, right? Making a very strong bearish momentum move towards the downside. Look at the we call this the how should I call it, the steepness of it, right? It's really pretty steep towards the downside. In fact, it's the lowest point, right, that the MACD has made relatively over to the last, 100, 150 candles. Okay, so this tells you that there is strong momentum towards the downside. But this doesn't mean that you go long immediately, right? Remember, the MACD histogram only tells you whether momentum is strong or weak. Right now, it's strong towards the downside. When we want to take a trade, right, we are looking at multiple factors. So right now, we can see that the price coming to this area of support, okay, and it's confirmed, right, by so-called this bullish price pattern, right? This is what we call I don't really have the exact term for it, something like a bullish engulfing pattern, but not quite. But you can see that clearly this is a bullish reversal price pattern, right? So traders can look to buy over here, right, at this area of support with a strong momentum towards the downside, okay, because you know that whenever there's a strong momentum, right, it could be just as quickly reverse back towards the upside. Why is that? Because the opposing pressure, right, would only come in at a later part. So you can see that over here, chances are you might find sellers at this level over here, compared to a move, right, that comes down like this, right? If you buy over here, pocket of sellers could exist, right, to push the price lower over here. But in this case, we have a very nice clean move down lower, nice power move down, and this power move is defined by this MACD histogram that you see over here. Okay, make sense? Okay, so first one, right, MACD histogram, it helps you to identify momentum reversal in the markets. Moving on, how do you identify explosive breakout trades about to occur? In this case, you can also use the MACD histogram again. And one thing to point out is that different indicators have different purposes, but it's not to say that only the MACD histogram can identify explosive breakouts. It's also not to say that only the MACD histogram can identify momentum reversal, because that's not true. There are other indicators that can also meet this purpose. For example, you can use this one, Bollinger Bands. You can use the Keltner channel. But for this video, I'm just sharing with you the MACD histogram, because the main thing that I'm trying to point out is that you always must have the purpose in mind and then finding the right indicators to meet that purpose. Okay? So anyway, moving on, how do you identify explosive breakout trades about to occur? MACD histogram is one of it. Okay, so before we talk about the breakout, right, you must understand that how the market moves, the price action, right, is that whenever the market is about to make a big move in the market, okay, when the price is about to make a big move, okay, volatility in the market tends to shrink. This means that, let's say, prior towards the breakout, okay, volatility in the markets, you see that over here, it tends to shrink, okay, like this, okay. Once volatility has decreased, then it usually makes a big move in the market. So if you look through back at your charts, right, whenever some of the biggest move of the market that occurs, right, it usually happen, right, when most traders are not paying attention, because the market is in a low volatility environment. So now the question is, how do you identify this low volatility environment? Well, that's where the MACD histogram comes into play. Again, see the purpose. So now let me just share with you a few examples. Okay, so one very popular market is Bitcoin. Okay, so you can see over here. Just look at this. Look at the MACD histogram. Pretty much flat dead line, like a dead patient in the hospital. Dead. This tells you that volatility in the market is really low. And remember, I just said that prior to the price making a huge breakout in the markets. Volatility in the market is usually very low. Not many traders are paying attention to it because the market is boring. That's where you should be high alert, right? In a high alert mode, right? And hey, the market is about to do something big. In this case, right, the MACD histogram clearly, right, gives you ample warning sign. Now, you don't have to use the MACD histogram if you are, again, right, someone who can read the price action of the markets, because traders who see this chart, right, they will know that volatility over here, based on the range of the candles, it has shrank. But again, indicators make your life easier. You can simply look at this MACD histogram and notice that the peak and trough is just pretty much went missing. Okay, so this tells you that volatility in the markets is low. And not only that, price has approached this area of resistance over here. Okay, so this tells you that, hey, price is at resistance, volatility is low, the price is hovering here for a long period of time. There's a good chance that the market could break out. So you can see over here, right, well, obviously this is a cherry pick chart. The market did a breakout from here. Again, low volatility environment. Then we have the breakout, volatility expand, volatility shrink again, then expand. You see what I mean? Market moves from a period of low volatility to high volatility and vice versa. So another example here on Bitcoin, just go back a little bit in time. You can see again, same phenomenon. High volatility in the markets, low volatility in the markets. At this point, traders, market is boring, Bitcoin is boring, let me move on to something else, something more exciting. But little did they know that this is about to make a huge move in the market. Okay, right, so we can see that low volatility environment again coming to this area of support, You can expect a cluster of stop orders, right, to be lying below this lows, and even this lows over here. So when the price break down, right, when this cluster of stop orders get hit, right, very strong selling pressure would come in, and then you go, pretty much kaboom. Okay, so this is what I mean by using the MACD histogram to identify low volatility environments in the market. Because once you can identify low volatility environments in the market, especially when it leans against market structure like support resistance, this is where you want to get ready for an explosive breakout. Make sense? Okay, let's see. Just one more example, okay, because this is so powerful. Okay, so again, dollar against the Chinese yuan. So this one over here, right? Okay, you can see that there's an area of resistance over here. Volatility of the markets here getting smaller as well. So what is likely to happen? Well, when volatility of the market is low, when it's approaching a key market structure like support resistance, in this case resistance, get ready for fireworks. Okay, so yeah, so I think you get my point. Right, let's move on. Okay, so expect volatility to expand soon. Third thing, right? How do you set a proper stop loss, right? So you don't get stopped out unnecessarily. So here's the thing about trading, right? Is that, often, right, one of the biggest mistakes that I see traders make is that whenever, let's say, they buy at support, okay, they buy over here, where would they put their stop loss? Well, if you look at it, all the textbooks, right, the courses, the gurus, they tell you to put your stop loss, right, just below the area of support, right? Because their reason is that your stop loss should be 1-2 pips below support, because once a price hits it, right, your trade is invalidated and you should get out of the trade. Well, that only is true, right, if support is a single line on your chart. But here's the thing, support is not a line on your chart, it's an area. So just because it breaks down by 1, 2, 3, 4, 5 pips doesn't mean that support level is invalidated. It's an area. Okay, so how do you define that area? Or rather, how much buffer should you give, right, so that, your trade has enough room to breathe? So this is where the average true range indicator comes into play, because it measures volatility in the markets. What if you could set your stop loss, right, based on this market structure? So instead of setting it 1-2 pips below it, you set it 1 ATR below it. So ATR stands for average true range. It measures the historical volatility of a particular markets of a particular time frame. For example, euro dollar, let's say the daily time frame has an average ATR of 70 pips. So what it does is that you can use this market structure and set your stop loss 1 ATR below support. So in other words, let's say your price level at support is, let's say, X. You can set your stop loss, right, at X minus 1 ATR, and assuming, let's say, ATR is 70 pips, right, that is your stop loss, and let's call it Y. Simple. So this way, even if the price were to, trigger below the lows of support, you might not get stopped out, because you're giving your trade a buffer, room to breathe, right, compared to all the other traders who got, swept out of their trades, right, the moment their stops is below support. Okay, so let me share with you a few examples. So you can see over here, I think the crude oil one again is a pretty good example. So you can see over here, the price, right? You have a nice strong move, power move into support. You have this reversal on this this candle over here. Again, what I usually do is to have my stop loss, right, 1 ATR below this low. So this way, right, my stop loss is not going to be smack below this low, right? You're just going to have some buffer below it. So what I do is, okay, let me just remove this indicator first. Let me just hide this. And I'll input the average true range indicator. So I typically use a 20 period ATR since there's 20 trading days in a month. Click OK. So right now you can see that if I were to go long, right, I would go and find out what is the current ATR value. And if from the looks of it, it's about $2, right? Let's make my life easier, $2. So what I'll do is I'll identify the lows of this candle over here. Let's assume that the lows of this candle is $50. I know it's not $50, but you know, just to make my life easier. So $50 minus 1 ATR, which is $2, my stop loss will go at $48. So $48 is somewhere about here. Okay, let me just put a red line for you at 48 bucks. And I'll change this to red. How about pink? Okay, let's do it. Okay, so this is my stop loss. So you can see that. I mean, it's a little huge to be honest, right? Okay, about $48. There about, okay, 47.90. Okay, so there is my stop loss. So you can see that even if the price were to trigger below this low, I'll not get stopped out because my trade has enough breathing room to withstand the sudden spike down lower. And if you think about this, even if the price, let's say it comes down lower, at this point, does it mean that support is broken? Well, not quite, because remember, support is an area, right? This could be an entire area of support. This could be an entire area. Okay, so what you want to do is to set your stops right away from that area. There's no point putting your stop loss within that area if you know that area is going to serve as a barrier to prevent the price from heading down lower. So you want to set your stops away from that area. So what I shared with you is just a technique, right, to give your trade, right, enough buffer, enough room to breathe, right, so you don't get stopped out of your trades unnecessarily. And to be honest, this is a way too much, right? If to be a little bit exact, right, the lows here, it's about $50.54. So my stop loss, right, should be $48.50 thereabout. Okay, so it should be about $48.50. That would be somewhat more accurate. Okay, so thereabout here, that would be my stop loss. Okay, this is how you set your stop loss, 1 ATR below this low. Another example, right, you can see over here, let's say dollar yen. Okay, so if you look at dollar yen, you can see that again over here. Right, let's say, for example, you shot the breakdown of these lows. Maybe the market is in a downtrend, right? Series of lower highs and lower lows. And you shot the breakdown of these lows thinking the market could go down lower. So again, where do you put your stop loss, right? Many traders will just put their stop loss at this highs over here, just above this highs. And if you think about this, right, the price, what it could do is just come up higher into this area of resistance and then reverse down lower. In this case, does it mean that the resistance is breached? No. Because remember, resistance, support, it's an area on your chart. So you should treat this as an area. So when you want to set your stops, right, you want to set it outside of the area. And then again, you can just use the 1 ATR technique I shared with you. Just find out what is the 1 ATR value. In this case, the 1 ATR value, it's about 60 cents. Just calculate the highs over here, add on 60 cents, and that would be your initial stop loss. Okay, makes sense? Okay, this is important stuff as well. Okay, so this is how you use the ATR indicator, right, to set your stop loss, right? Identify the key market structure and set your stop loss 1 ATR away from it. This helps you avoid getting stop hunted when the price just, hits the highs and then reverse from it, right? You can escape a lot of those situations, right? If you look through your charts, right, how many times have you get stopped out of your trades just by a few pips because the price just take out the highs, just take out the lows, and you're out of the trade. Okay, so we don't want that to happen. Next, you can also use indicators, right, to identify area of value. So what is area of value? So area of value, right, are simply levels on your chart, areas on your chart, right, where you want to trade from, right? For example, you want to buy at support, you want to buy at the trend line, okay? And these are not the only ways to define area of value, because when the market is trending, moving average, right, can serve as a very useful form, right, as an area of value. So just follow me for a while. So you know that support resistance can be an area of value, but the thing is that when the market starts trending strongly, right, your area of value will change. So for example, let's say the market trend is strong. You're not going to expect the price to retest, right, let's say at this swing low or this area of support or here, because you know that the market is in a strong trend. It tends to do a shallow pullback before continuing higher. So now you have to adjust, right, how you define your area of value. So this is so important, right, to actually understand what is the current market structure and then using the right tools to trade it. So in this case, if the market is in a strong trend, the 20 period moving average, right, it's a good place to be looking for trades. If the market is in a healthy trend, this is where the pullback are slightly deeper. The 50 MA are a useful moving average, right, to identify your area of value. So let me just share with you an example. Okay, just close the MACD first and get out my 20 MA. Okay, so if you look at this again, okay, you can see that again, this one over here, dollar yen, right, tested once, traded lower, tested twice, traded lower, and now it's back here at this area of value. And on top of it, right, you have this so-called bearish engulfing pattern, right, that reverse at the 20 MA and reverse at this market structure, this area of a previous support then resistance over here. So hey, this is a possible setup to go short. And again, right, you can just set your stops 1 ATR above the highs. In this case, the market right now, it's not working too well in your favor, but really doesn't matter, right? Trades is all about the next 1,000 trades, not just one individual trade. So just focus on the concept that I'm trying to share with you right here. Okay, so moving on, let's see what else can I share. Gold. Okay, gold. So if you look at gold, you see over here, okay, these are all the pockets of swing low here, here, and here. And you can see that when the trend is strong, right, it seldom retests the previous area of support, seldom retests the area of support. So this is where you need to redefine your area of value, redefine where you can trade from. And in this case, right, since the trend is strong, right, you can see that the price did not breach beyond the 20 MA. You can look for trading setup at the 20 period moving average. So in this case, you saw that there is a bullish price rejection over here at the 20 period moving average, one over here, right? So this is a potential trading setup for you to go long. Okay, so this is for gold. If you just look back a little bit more in time, you can see again, right, price here, okay, when the trend is strong, it doesn't retest resistance, it doesn't retest the swing high at all. So again, you have to find out, right, different trading approach to enter the market. So if you know that the trend is strong, you can look for a retest of the 20 MA, right? For example, this one here, the retest of the 20 MA. Or alternatively, you can look to trade the breakdown of the swing low. In this case, the breakdown of this swing low, and then have your stops again, right? Just beyond the moving average or the swing high. Okay, let's see. One more example, it's palladium. Okay, so just look at this type of chart and you know that this is a strong trend. Right now, I'm going to introduce to you what I call a healthy trend. So you can see that when you compare the chart of the earlier gold and right now palladium, you notice that in a healthy trend, the pullback is deeper. But the concept is still the same, right? You want to identify the area of value. And usually in a healthy trend, what you'll notice is that the price tends to retest previous resistance turn support or previous support turn resistance. So in this case, right, this is in an uptrend, right? You can see that it retests previous resistance turn support, right? This one would be the resistance, okay, in this case. And so will be the next one over here. Okay, not always, but there's a good chance that it does, right? Because of the deeper pullback that could actually retest the previous resistance turn support. So this is where the 50 MA usually align, right, with the previous resistance turn support. Okay, so pay attention to it, right? This really is an area of value on your charts, right? And it is definitely a level and area that you want to identify your trading opportunities. Okay, so don't get too fixated on just trading off support resistance or trend line, because when market structures go into a trending mode, a strong trend, healthy trend, right, you realize that it seldom come back and retest, your horizontal SR levels on the chart. Okay, so this is moving average, okay, helping you to identify area of value on your chart. And finally, right, before we end off today's session, I want to talk about how you can actually combine multiple trading indicators. Right, it doesn't mean that you can only have one indicator on your chart, because once you know the purpose of your indicator, you can actually combine them, right, and set up a trading strategy, a trading plan. For example, again, let's go back to this one over here. Let's say for whatever reason, right, you are looking to buy at this area of value. Maybe there's a bullish close above the 50 MA, whatever. Okay, so you go long. Okay, at the same time, you have to know how much of a stop loss you should use. Then you can look at the ATR indicator, find out what's the ATR value. In this case, it's about $22. Then you just take the lows minus $22, and that could be your stop loss. So in this case, you can see that you're combining both moving average and the average true range. And that's not the only way to do it, right? You can, for example, let's say combine MACD histogram with the average true range. You can use, Bollinger Bands with the average true range, right? So there's a lot of ways you can use your indicators, as long as you know what is the purpose of your indicators, right? So this is so important that it bears repeating again. Okay, so you can combine multiple trading indicators, right, as long as you know what's the purpose. So as a quick recap, right, number one, know the purpose of your indicators. This is so important. Okay, and it's something that I have, hammered home right from the start. Then I shared with you how the MACD indicator, right, how the MACD histogram helps you identify momentum reversal and explosive breakout trades. We talk about how the ATR indicator helps you set a proper stop loss, how moving average help you to identify area of value, and we talk about how you can also combine multiple trading indicators if you have multiple purpose. If you need multiple purpose, if you have multiple needs, right, in your trading. Okay, so with that said, right, before I conclude today's video, if you want to learn more about price action trading, because clearly you can see that price action trading and indicators, they complement one another. And if you want to learn more about price action trading, you can go down to my website, okay, tradingwithrayner.com. The link is above here, right? And download this guide, right? This one over here, the ultimate guide to price action trading, right? Click this orange button and I'll send it to your inbox for free. And you realize that, once you learn about price action of the markets, then you know, right, which are the appropriate indicators to use. So what I've just shared with you is just a fraction, just I would say the tip of the iceberg. There's really a lot more of other indicators to use once you know what you're looking for, right, and how indicators can make your life easier. Okay, so with that said, go ahead, download this guide. Any feedback, comment, right, just let me know below the comment section. I'll do my best to help. And hit the thumbs up button, subscribe to my YouTube channel, and I will talk to you soon.